The world's oil-producing group, OPEC, is meeting in Vienna this week with discussions focusing on a potential cut to oil output. The current agreement is due to run out in March next year, but the group could cut daily production by a third if agreed by non-OPEC countries, including Russia. Well, joining me now is CNN's John Defterios, who's at the OPEC meeting in Vienna. I mean, these are big cuts, John. What's at stake here?
Well, it's extraordinary, Hannah, because 24 hours ago, if you asked me the same question, there was discussion of a rollover of their existing agreement of 1.2 million barrels a day under this OPEC Plus apparatus. Overnight, I heard 400,000 barrels a day, and then I spoke to the Russian minister, Alexander Novak, about an hour ago when he came out of the monitoring committee meeting and said 500,000 barrels. And this is going to be limited to the first quarter. But what are they seeing in terms of a slowdown? Earlier, I spoke to the Iraqi oil minister who said they're very concerned about the U.S.-China trade tensions, that it may spill well into late 2020, if not beyond. The new tariffs proposed by President Trump on Brazil, of course, as one example, Argentina is another, and France. This doesn't set the right tone. And I think behind the scenes, there's the Saudi Aramco IPO and the new Minister of Energy, Abdulaziz bin Salman, not wanting to carry the burden alone with Saudi Arabia of the cuts. And they're saying, let's make it official. Let's make it 1.7. Let's see what it does to the market. And let's experiment for the first quarter and then build from there and see.
I mean, how does this Saudi Aramco IPO actually play into the meetings that are going on over the next 2 days?
Well, everyone is insisting that it has no influence on what's going to be taking place here as they finish out the OPEC Plus meeting on Friday. But clearly having a price of $63 a barrel for North Sea Brent, where we are right now, gives nice support for the Aramco IPO. And again, we're living in a new regime here. I'm hearing it inside OPEC headquarters with Abdulaziz bin Salman, the new Minister of Energy, and being the half-brother of the Crown Prince. They're taking no prisoners here. They're not putting up with the idea that Saudi Arabia has to serve as the swing producer, the one taking the biggest cuts and not getting alignment with Russia and the other major producer within OPEC, for example, Iraq. So I think they're saying, look, this is an important window for us, this IPO. Of course, we'd love to have your support. It's not the only reason, because this will support higher prices throughout 2020 and take out this volatility that we've seen in the market over the last couple of years.
I mean, how much cohesion is there between the countries at play here? Saudi Arabia has cut more in the past. I mean, it's certainly leading the way when it comes to cuts. Other nations are perhaps only giving token cuts. They're not as involved.
Well, there's been a change of tone here. For example, with Alexander Novak, he was suggesting we're willing to go along if this is the recommendation with everyone. I think the horse trading comes in where Russia didn't want to count their condensates, the liquids in their production, so they'll stick to crude but be much more coherent with their message that they're in alignment with Saudi Arabia. Iraq said the same thing. If we're asked to do so, we will. But for the most part of 2019, Iraq's been overproducing by 200,000 to up to 300,000 barrels a day. That's a lot. Right now, they're hovering above 140,000 barrels a day. The minister told me they have political problems in Iraq to make sure it works. Now they have the Kurdish region involved. They're going to cap that production and say we go along together. I think it's the preservation of the OPEC Plus agreement. And Saudi Arabia is saying, look, we've been at this for 3 years. I'm a new minister. I'm sitting down at the table. I don't plan to have us carry the extra burden alone. The major producers have to come along, and even players like Kazakhstan, who have been overproducing, and Nigeria as well.
So do you therefore think that this could be quite a difficult meeting, especially when the OPEC Plus countries joined on Friday?
I don't, Hannah. I think it's different. I think the hard work was done in the first 4 hours of this joint monitoring committee that they had in that meeting. That was not an easy one because it included the Russians. And overnight, I know the Iraqi minister met for over 2.5 hours with his counterpart from Saudi Arabia. I saw the UAE minister, the OPEC Secretary General at the Grand Hyatt here in Vienna. So there was a lot of bilateral meetings last night. They expanded the group to get the major players around the table. And I think the Saudi minister is saying, look, we don't want to send a signal that we have a lack of cohesion within the OPEC Plus apparatus. Let's get the work, most of it done overnight, get to the table and say, we're going to do something bold here. We're going to make this official and call it 1.7 with this extra lost production in Venezuela and Iran because of the sanctions, but to send a stronger signal with the concerns they have over trade that they're prepared for a slowdown in the global economy.
Well, can you elaborate just very briefly? We're running out of time, but what will the impact be, or what could the impact be on the oil market going into 2020?
Well, I tell you, Hannah, come into this meeting with those concerns about growth in 2020, as you're suggesting, have a price of $63 a barrel. That is pretty darn good. So I don't think we're going to see a massive rise up unless you have that U.S.-China trade agreement come together, and that lifts the cloud, and that could boost demand. Right now, they're worried about demand going forward, so that's why they're taking this precautionary measure at this stage at the start of 2019, at the end of the year, going into the start of 2020.